All right.
There we go.
All right. Yeah. So say like RTY. Okay.
Yeah.
I've been watching this chart for a long time, and I knew this was the play here has always been since almost the whole day, right through the early morning. The play has been from the 200 to this orange line right here, which is the New York Open from yesterday.
Right.
And I knew that it has to break it. And if it breaks, then lo and behold, we will actually go really, you can see here, right here. If we break that, then it just falls. Look at that. Look at the candle now. Like, just waiting for this. I've been waiting for this for a lot. I would have just, if I was trading right now, I would have been trading this right now because I know that this is what's going to happen.
Right.
And then, which is where kind of the one and done is in a way, where you have the biggest bet on the best setup that you have been eyeing for a long time. Yeah, so or NQ going long. But all I'm saying is just preparation, So why was I actually super keen on that RTY move, just that move. And so again, I'm looking for, my whole idea of all of these moves, all through RTY's move here, was 20 ticks. Okay. And every time my entry would have been at the 200 of the 1 minute, which is right here. Every time. Okay. And you see the double one. So instead of focusing on single ones, which is what you have here and here, there was a double one here. Right. So I want to just focus on double ones. And then even if this is double one right here, my take profit was 20 ticks and my stop loss was 12 ticks. So from 48.4 to 49, it's 6 ticks or 7 ticks max of stop, which is not going to take. And then, from 48.4 to 46.4. So that's my take off right there. And I would have repeated that even here at this 200, it went up to the 200. So I said, my entry will always be at the 200, either the 200 of the 1 minute or the 200 of the 5 minute, which is right here.
Okay.
So this shallow ones, so like, this single one versus this single one, there's a huge difference. This is a big difference for me. For me, the pullback needs to be somewhere to the 200 of either of the 5 or the 1. That is the most important. Because then it kind of, when it starts continuing from there on, then it actually goes pretty well. I mean, today is a different day for sure.
Yeah.
But I need, so like here, like this 200 here is the 5 minute 40. You need that. But why was RTY negative, or why would I want to keep shorting RTY today? Is because if you look at RTY yesterday, so I'll remove this right now. So you'll see here RTY. So have a look here now. So this is your London Open. We mark it out. So this is London Open, which is at 50-50. Then you have this US pre-market open, 48. Okay. Your 200 or the 40, which is kind of, going this way, which is again below this line. This is yesterday's London Open. Okay. So that also is like 48 something.
Yeah.
Right. So that if it has to go short, we will try to test this zone. And then if it fails, it will fall. Right. Otherwise, it will reject and try to go up. So there are two places. You can either go long or you can go short. Now, looking at the indicators, and again, so, and I've not shared this with you yet, but you can see here on the 15-minute chart. Okay, this is what I have been experimenting on the 15-minute chart. Like this dotted line is the 20, and this solid line is the 40.
Okay.
So if I want to go short, if I was tempted to go short on 5 or the 1 minute, I will first refer to the 15-minute chart and this 40 line. Okay. I want the price to be below the 40 for me to even think of a short every time.
Okay.
So that's my rule one for going short. I will not go short until I see the price on the 15-minute chart going below the 40. So the candle colors will change at 40. Okay. So here short, but then once you kind of go, and then you can see the 20 broke the 40 somewhere here, which is yesterday night by 11 o'clock. And then it has remained, the 20 has remained below the 40 all through the day. So the going short is good on RTY. You can see that the waves have been split, but the DPOs have actually gone below zero pretty much here. All of this. So the short is anyways a given. Okay. Then you basically then go back to 5 minutes to say, okay, so if that's a short, then what am I looking for? Then I would say, okay, the London Open was so and so, the previous London Open was this. So 48 looked like the place from where it will actually remain short. Based on what I was showing you earlier, this is the previous London low. Oh, sorry, this is the previous London Open. This is today's London Open. This is today's pre-market open on the US.
Yeah.
Right? And I know that the overall theme is going short. So if that's the case, can I stay at this 200 level or the 40 level to take those shorts? Like for example, you have a double 5 here. Awesome. You want to double 5 entries on the 200 and you want to take that short. And you can see here that every time we were always going towards this yesterday's New York Open, and if my target is 2 points, it's an easy 2-point target. So these are high probability. This then become automatically high probability trades. All you then have to look for is the pattern that we anyways know, because and then because the distance that we are traveling is not that big, my take profit is fairly reasonable. So I'm not looking for big gains. But then I was not for larger risk either. I was looking for like 12 tick stop on a entry at the 200, and what I said was 20 tick take profit here always. So I find RT. So when just preparing this levels or this kind of a thought process, frankly, especially when मैं कॉल पे कहीं चले ना कर दो हाँ चल रहा one second.
Yeah, no problem.
The Wi-Fi repair guys are here.